Hi everybody, Brian here. Welcome to another Quant Analytics tutorial. In this particular video, we're going to talk about what I call the big ass reports. These are Word documents that I run every hour based upon my watch list, which I've talked about briefly. But here is what's in the watch list that meets certain conditions, both either in crypto or Bitcoin. So all of these files I'm about to show you, or the Word documents, are based upon that watch list. So first of all, when you download and you get access to these, you'll notice some of these Word documents are very small, like at 36K. What that means is that the market conditions, it'll generate a blank file, and the market conditions are not meeting to generate something for that file. So what we have here is we have 4 Word documents that get generated from this big ass report. We have a Word document that gets filtered based on volume. So only the big pairs that are widely traded get listed in this document. We have just one that combines everything. Then we have another one that's filtered on just basically strong trend. You'll see that. And then we have another one that doesn't get generated a lot, but these are pairs that may be shorting opportunities. That's not it depends on the market, but it's there, and you can use through weird margin trading setups through Binance to do shorting. I just do longs. I just find shorting in crypto doesn't make sense. If you have an account and you set it up in a way, and I'm sure you could work with Binance to figure that out, that's fine. But it's just I kind of ignore these, but I'll show you this file. So in each of these 4 documents, what we do here is we have the title, the time it was generated. Okay, so these are sell signals. Okay, so we have 2 pairs in here. One on this one, FTM BTC and Win BTC. So what we typically do is for whatever shows up in this report, I take a group volume and I measure also the group or mean or the average of the group that are listed here. So there's only 2, Win BTC and FTM BTC, and I calculate, this report will calculate the average of that group, those pairs in that group in this report. We calculate the mean, and we also calculate, the volume mean, as well as the volatility measurement. This is important because, as you'll see in the bigger reports with more pairs, you can help use that to filter out what is more meaningful to you. Like for instance, if you want to trade only pairs that have that are above the group mean or the group average or the group trend, so you can do that and do those kind of comparisons. So what we then list out is the pair, in this case FTM BTC, and then we have the individual standard deviation measurement, which is the volatility of this pair. That's measured over a certain period of time, which looks like it goes all the way back on daily returns, all the way back to August. So a couple of months, and these are daily returns. You can combine these with the stats as well and get some history based on those that show up in those reports. So here we're able to, as I said, get the individual pair standard deviation, which is the volatility, the volume for that pair, on top of, if you were to trade it, is the price, the current price in that golden range of around 618, and if it is, then it's worth trading because it's going to have a down move or an up move, and you'll get some profit at either end on, depending upon, in this case, the shorting side, if you wanted that. So here's the first report, or sorry, first chart. So you can see here it's all generated by Chart Director. Again, you can learn about that in the Python course, infrastructure Python course. So here we have just simple cross moves. Are these reliable? Probably not. That's why I like the Ichimoku. They're much more reliable. This is just more simplistic moving cross signals based on moving average. Here, you remember I talk about in another video about manipulation on price moves. You can see the price moves are clearly manipulated here because the swings, the magnitude of the swings are consistent. So to me, this is one of those pairs, even though the price moves look weird, this is a manipulated, to me, this is a manipulated pair, and I'd probably not want to touch it. So you could put in your bots filters on pairs that you think are manipulated. You could easily do that in your scripting. But nonetheless, here's the overall trend. When it's negative like this, you know you don't want to trade it because it's in a downward move. But guess what? The overall space since the summer, last 6 months, has been major downward pressure on the overall crypto space. So you will most likely see more of these trends pointing down. But obviously, you want to go with a trend where the price overall on a daily move is somewhat moving upwards, which is positive, not negative, like here, which is the green line. Also, here are the Fibonacci levels, and when I made mention of the golden zone, that's between the 618 and the 382. So when you have your price in and around here, the timing is so important when it comes to your price that if your current price is in this zone of 382 and 618, according to these charts, that's a good time to go in. And if you know that there's going to be a move up, you can profit here, or move down on the short, you'll get some profit. So you kind of want to trade between the 382 and 618 according to this chart. Also, I've done big studies on candles. So with the candle patterns, we can flag which are bearish, which are bullish. I've got lots of videos on candles on my YouTube channel. And there's different types of candles that can be reliable and other ones that cannot be reliable. One thing I will say, the candles for the Marubozu can be predictably pretty good as a reversal. So when you see these bearish, chances are you may have a pivot point where it's bearish, means it's obviously going to turn against you, or a bullish that will move in your direction as well. But again, you got to understand that these are not to be relied on exclusively, but these are one of the flags that you can look at to say, do we have a classic reversal pattern happening using this Marubozu candle? And there's other types of candles that get listed here as well. And depending upon your short and your longing, you can look for these. And again, these are for daily returns. Okay, so you'll see 8/17, August 17th, we had a bullish signal for using a Marubozu. Awesome. And this is so predictable because this may be manipulated. But if it's so manipulated, chances are you may be able to trade this if you know it's manipulated. You know you get these signals and they can be relied on. You could probably make money using these particular pairs. Just got to find them. But you can see there's a huge list of these candle patterns. And here we have other patterns as well, separating lines. There's a whole slew of them. And out of that, you just go to the patternsite.com and look for what's to be relied on. I've talked about this before. I think it's called the pattern site. You can go through this and look at which candlesticks can be relied on by going through this report. All the different types of candles in there. I got a whole slew of videos on that, and that's just a hint to help you out. Okay, so moving on to the next pair. It's the same format as before. Here's WinBTC. We have our standard deviation and our group volume. So what you can do here is you can compare that individual volume for Win BTC against the group one that I hinted at earlier to compare. Maybe you could trade this pair because it has better volume. And you would also want to look for pairs that are less volatile, so you can compare that against the group volatility as well. So again, here, this one seems to be manipulated, same thing, where the price magnitude is weird looking. I've seen this many times. This is, to me, somewhat manipulated. You can see here, when it hits that 236, get out. When it hits close to this 786, get out. It's just, don't ask me what's going on, but who knows? There's something weird going on. And Binance may have manipulation. You can see here they allow it, they turn a blind eye to it. But there are other pairs, the bigger pairs, the higher volume ones are much more reliable. So again, you get the data, but you choose what you wanna trade. So that's the shorting. Okay, so I've walked you through the format of these reports. So let's look at a blank one based upon trend right here. So we have one here. This one's based on trend. Let me just load that up in Word. So this one's going to be empty. There is no reports generated because it's blank. Okay. So moving into other pairs, we have two other ones. We have a general long, and then we have one based upon volume. So let's look at this one first. These are the same format. Okay. Crypto long. Okay. So this one doesn't filter by trend or does not filter by volume. Okay, so we have 14 pairs here. I do put them in order based upon potential with higher probability of profit, factoring in all the things I'm going to show you. But again, I wouldn't rely on it wholly, but you got so much data here to work with that essentially you can measure what ones you want to trade at that point. Because remember, all these files I'm showing in these tutorials kind of get updated every hour. So here's our first one, Chat BTC. This is the one that gives you maybe a better chance of probability of profit. But again, pay attention to these two metrics right here. This is the group mean for all 14 pairs listed here, okay? We also do the same thing based upon volatility. That's a pretty low volatility. So in this case for Chat BTC, you can see that it's less volatile compared to the group. But the volume, it's kind of light. So even though you may want to put a trade on here, how will your fills do? Well, if you have problems filling it, it's because there's no volume there. And again, this is another important metric, is if you were to take on a position, is it within that golden range using the Fibonacci levels I hinted at? So here, same thing. We've got the usually moving average cross signals, strong downtrend as I hinted at. We also have here, maybe we have the candles again, the patterns. Again, what I mentioned with the other pairs in the short report. Again, this is your choice if you want to trade it or not. You could probably make money if it's predictably manipulated and just ride out those oscillations based upon what you see in the pricing moves in the chart. Okay, so let's get to the next. Here's another candle, tight, 3 stars in the south. Again, you can go to patternsite.com, check those all out. Separating lines. You'll see the popular ones. Here's another one, GTO, BTC. Again, compare this standard deviation against the group. Same with the volume. Is it within the golden zone? Everything stays the same. Nothing fancier than this. Okay, so you have the bullish, bearish signals, and it just goes on and on and on. You have here 168 pages, so no one's asking you to go through every single report, but it just is there if you wanted it, just to go through if you want it. These are generated automatically. Okay, so this one might be very useful for you. The next one, crypto filter based on volume. So if liquidity is a concern for you for a lot of these pairs, these are the pairs you could probably trade at this point in time, because the volume mean is this, and here's the pairs that meet that are more than 10K, and you could trade these based on that and go through the same report. We have the group mean and the volatility, and only trade those pairs that are more than the group mean. Just as an example, everything stays the same. Everything stays the same. Nothing unusual for each individual report and pair that you're looking at. So this may be kind of overkill, but it's there if you want it, and this report can be helpful. Hopefully it'll help you out. We shall talk to you later.